Is the market going backwards and into multiple offers again? The number of sales rose for the first time in over 6 months in the Fraser Valley, so we're definitely off to a good, strong start for 2024. In this video, I'm going to go over sales, benchmark pricing, interest rates, and where I feel the remainder of the market is going to go for the rest of the year. I'll also share some personal stories with you that I am seeing with my own clients out on the field. But before I dive in, if you guys would hit that like or subscribe button, I would greatly appreciate it. And if you want to book a 30-minute call with me, you can do so by clicking the Calendly link below. All right, so let's first start off by talking about sales. So in the valley here, you can see that sales jumped 50% year over year. So January 2024 saw almost 50% more sales compared that to last year in January of 2023. We also saw a 12% increase in the number of sales from December 2023 to January 2024. And that's generally the case when we do compare December to January, just because December is generally a slower time of the year. I wanted to show you guys sales on a bigger scale here. So I've gone back 3 years for all property types in the Fraser Valley. 2023 was quite a slow year and sales were at their absolute lowest January 2023. And then sales started to increase up until June. Since June, we have seen a decline in sales up until just recently. Where I want to draw your attention is to the number of new listings. So we had an increase of 151%. So the number of new listings doubled in 1 month. The last month, January 2024, we had 2,368 new listings. That is a very good thing to see. We desperately need new listings on the market, and in turn, that should increase the number of sales. So we should start to see this number here continue to go up as we get into the spring market. Turning our attention over to the number of active listings. So we can see here active listings are sitting just under 5,000 units. We do like to see that closer to 6,000 because that does represent more of a balanced market. You can compare that to last year. We were lower than that. We were closer to the 4,000 unit mark. So definitely that's an improvement this year. We want to see more active listings on the market because in BC and especially in the Fraser Valley, we don't ever seem to have enough housing for the amount of demand that we have. And average prices are up 10.8% year over year. And they're also up 5.2% from December to January. The Bank of Canada recently met January 24th to announce their next move for the rates, and they decided to hold the overnight lending rate. So that alone has already stirred up a lot more buyer demand because the buyers that have been sitting on the sidelines over the past year as they've watched rates go up consecutively are now starting to have more confidence in the market and are wanting to get back in. So I've had a lot of people call me, and usually January and February are not the busiest times of the year. However, that's been an exception this year. So I've already had quite a few people call me, whether that be an upsize or a downsize. I'm seeing both in my marketplace right now. But one thing's for sure is that our spring market has definitely come early this year. The next time the Bank of Canada meets is going to be in March. And again, I believe they're going to hold rates yet again and wait until closer to the summertime before we see a decline. To provide some insight on just how much rates increased over the past year and a bit, I wanted to share this graph with you so we can see that in 2022, 2023, which is when we were experiencing all our rate increases, this is a very, very steep incline. It's more intense than any other year in Canadian history. And so, of course, as a result, it definitely had effect on the real estate market. But that being said, considering how intense of an incline we saw in such a short period of time, the market overall was still fairly good. Kind of provide some insight on how much demand we actually have locally here. All right, let's talk about benchmark prices. So the sale prices across the Fraser Valley. Benchmark sale prices are down for the 6th consecutive month since the high we saw in July 2023. We're actually down 6% from that high in July. I can break it down to you by asset class. So we can see here the peak happening in July, and then ever since then we've been on a steady decline. Of course, with the recent announcements by the Bank of Canada deciding to hold rates and what I believe will be to eventually decrease the rates, I do expect that these benchmark prices start to increase because with the lower rate, buyers will be able to be pre-approved for more. And I really believe that the detached market, those specifically that have suites, are going to be in very high demand because sometimes you'd be surprised if you take a detached home with a 2-bedroom legal suite, sometimes your monthly payments can be similar similar to those of a townhome when you add on the strata fees. Rents too locally are going for very, very high because there's just that many more renters with the amount of immigration we've had, and also just the unaffordability of housing in general. A lot of people struggle to get that down payment and the pre-qualification they need to be able to afford a home locally. I am hopeful that with the rates coming down, we will start to see more buyers be able to get into the market because they're going to be qualifying at a lower interest rate. The most recent rates I've got for you, finally we have a fixed rate that you can get under the 5% mark. So that hasn't happened, as you can see, in quite a long time. Since the end of 2022, you weren't able to get a fixed rate for under 5%. So that is some good news there. Variable rates, as I mentioned, the overnight lending rate has held. So those are staying consistent around just above the 6% mark. I unfortunately have one of my properties at a variable rate, and I believe it's sitting at just above 7% there, thanks TD Canada Trust. But anyway, I'm not going to lock in yet because I do feel that they are going to come down. Don't quote me on that though. So believe it or not, I am not the only one that also believes that rates are going to come down. Found an interesting graph here, and it just suggests that before, so in December, people thought that rates were going to come down quicker than they actually did. And now fast forward to February projections here, we can see more and more people believe that the rates are going to stay the way they are until early summer, and then we'll start to see a decrease. I feel that this is going to be flat. We're going to see a decrease in June. The reason being is because with the spring market already underway very early, I'm worried that if they decrease it too early, it's going to be too big of a catalyst for what will already be a high buyer demand market. So I think that they're going to fall closer to June, and I hope they do fall 3 times here as this one shows. But again, we'll have to wait and see. But one thing's for sure, I believe they've already hit their peak, and we can expect those rates to drop, which will alleviate a lot of financial constraint that I know a lot of people are feeling, especially those that locked in at low rates in 2022 when they were, 1.5% to 2%. When they go to renew their 5-year fixed over the next year and a bit, so 2025 and 2026, they're going to be in for some sticker shock there. Even with the rates coming down like the projected 3 times that they are, it's still going to be a sticker shock for a lot of people. But it's good that they're coming down from the overnight lending rate of 5% that they're currently sitting at today. I want to talk to you guys about the sales to active ratio, which measures the absorption rate of a market and generally what type of a market we're in, whether that be a buyer's market in which the market favors buyers, or a balanced market where you have one perfect house for one perfect buyer, or a seller's market where obviously the market favors the sellers, like we were used to in the pandemic when we were seeing multiple offers and all that sort of crazy things. So I'll share my screen here. So I've got sales to active ratio highlighted, and you can see I've selected detached, all property types together, apartments and townhomes. The detached market, as I mentioned, is in a balanced market. So anything between 12 to 20% absorption rate is considered a balanced market. Detached were in a buyer's market at the end of 2023, 13% in December, and only until recently in January did we see the detached market finally enter into that balanced market. Condos and townhomes, they're hot. Townhomes are at almost 32%. That's a seller's market. Townhomes have been over the last year quite a hot commodity. And then of course, condos there are sitting at 25.5%. That again is a seller's market, just a little bit less intense than the townhome market is. As we start to see rates decrease and the spring market approaching, we can expect that these sales to active ratios should improve. I think that the detached market, as I mentioned, especially detached homes with suites, are going to enter back into a seller's market by the end of this year. I'll share some real life stories with you guys just to provide some insight on what I'm seeing out there. I have right now, I just was working with clients and they wanted a row home. We had a heck of a time finding one. So a row home is a townhome with no strata fee. It's basically one under a detached level. So they're duplexes, half duplexes. Sometimes they're in a row of 4, but any which way they don't have strata fees. So those are very high in demand, and we lost out on a few. I also took took these same buyers out to see detached homes with suites because the older detached homes with suites were similar to a brand new row home in their preferred neighborhood. We saw 2 detached homes with suites, both of which went into multiple offers. So anyway, the silver lining is that I was able to find my clients a brand new row home. It's perfect for them. They're super happy. But that one was a new build. It was not on the market. If that were to hit the market, I would not be surprised if we went into multiple offers again with that one. Another example is I'm working with another couple that's looking in the Willoughby Heights area for a townhome. We were in multiples for a backup offer last weekend. And this again is at around the $850,000 mark. So quite a competitive price point for the area. We lost on a multiple backup offer, which I have never been in a multiple backup offer. So that means someone already had an accepted offer on the property and we were going into a backup position should that original offer not remove conditions. I agree with the stats. Stats don't lie. The townhome market is quite hot. So is the row home market. And like I'm saying, the detached homes with suites, I'm already seeing it. Those are going to start to go into a seller's market as well. Condos are always in demand because you get investors as well that are purchasing them just because of the price point. I hope you guys found this information to be helpful. If you guys want to book a 30-minute call with me to talk about any of your real estate questions, you can do so by clicking the Calendly link below and book a 30-minute call with me. And just again, a reminder, if you are enjoying my content, I'd really appreciate if you hit that like and subscribe button. Helps me out a lot. Thanks again for watching and I will talk to you guys soon.